Welcome to the Spot On Insurance Podcast, brought to you by ILSA, Insurance Licensing Services of America. This is Ted Tavares.
And this is Arlene Tavares coming to you from beautiful Puerto Rico. I'm so excited because today we'll be exploring the latest innovations and industry trends.
But before we begin, please remember to click on the subscribe button so you don't miss a single episode. And now, here's our host, Doug Foresta.
Welcome to Spot On Insurance. This is your host, Doug Foresta. Today with me is Paul Buse, president of Big I Advantage, a wholly owned subsidiary of Independent Insurance Agents and Brokers of America. Paul, thank you for joining me today.
Thanks for having me, Doug.
So today we're going to be talking about what I think is a really important topic, which is compliance in the age of the internet. But before we do that, could you just say a little bit about your organization for people who maybe they're not familiar with it?
Sure. The Independent Insurance Agents and Brokers of America is the largest agents trade association in the United States. And it's actually a federation of the national operation working with our 50 states and the District of Columbia for 51 in assisting and helping agents with advocacy issues and all the things that trade associations do on behalf of their members. And then we also have a for-profit operation, which is where I work, and that is called Big I Advantage. And we do the products and services coordination with those 51 states of the collectively Big I.
Thanks so much. Now, one of the things we were talking about, we were chatting a bit before the podcast about how easy it is to go past your state line when it comes to compliance once you start doing business online. Could you share with us maybe even some examples just from your own business about how that happens, how you start going past state lines once you come online to do business?
Sure. It's an interesting clash, and it's happened so fast that insurance distribution has changed from what historically was a knock on the door and a seat at the kitchen table, where solicitation, which is an important word in the insurance business, was very clear. You're talking to somebody, you're in a geographic location, and regulations evolved around that sort of environment and approaches to things. In the past 25 years, we've gone from that largely being the way business was done on commercial lines and personal lines and life insurance to where we're on the cusp now of insurance being done increasingly on the internet. And where that solicitation takes place can easily slide from one state to the next because it's on the internet.
In your experience, what are some of the issues that producers have faced when they've crossed state lines to do business?
It's really easy to find yourself, even without setting out, to solicit insurance in places that you might not be licensed. We at our operation, the Big I Advantage operation, we have a subsidiary actually that's dedicated to our insurance-only transactions, and we're licensed in all 50 states in the District of Columbia. And the reason that makes sense is because we actually have operations in all of those. But let's say we were just in Alexandria, Virginia, where our headquarters office is. As soon as you put something on the internet, someone in Wisconsin or Wyoming or North Dakota, anywhere, could come across that and then ask you to place coverage for them because of your solicitation that you might be thinking is really intended for people in Virginia. You very quickly get into a position of not being properly licensed if someone comes to you from another state. And you have to stop yourself at that point. If you're not licensed, you really can't have regulated type conversations describing coverages and certainly not placing them with somebody in a state where you're not licensed.
Thank you so much. And I know one of the other things that we wanted to talk about is that states are very focused on collecting licensing fees and taxes. Can you say a little bit about what are some of the ways that states do collect these licensing fees and taxes?
Well, the big one is premium taxes, and that really doesn't involve us as intermediaries, as agents and brokers, or people who are listening to the podcast who are involved in the distribution of insurance. But premium taxes is the big one. There's approximately $1 trillion in insurance premiums in the industry, property, casualty, life, and health, and the average premium tax is about 2%, a little bit more. That's $20 billion. That is the big financer of insurance regulation in the states. Having said that, a lot of that money does not end up in the regulatory, it doesn't end up financing the regulatory process at the state insurance departments. Most of that premium tax actually flows into the general fund of the state, along with hunting and fishing licenses and fees, property taxes, personal income taxes, corporate income taxes. So it goes into that general fund. In fact, I believe it's less than 10% that actually stays at the insurance department to help them regulate the business. The money that, if you follow the money that's really important to insurance departments are those license and appointment fees. So they tend to be very, aggressive is not the right word, but very focused on making sure that people pay the fees to transact business in their states. Because generally speaking, I'm not a regulator and I'm not going to speak with a huge amount of authority, but generally speaking, they like those dollars because they stay in their budgets and they can help them with their funding of regulation. So if you're an agent and you stray into a state where you're not licensed, the state has an interest in regulating that for public policy purposes, but they also have a financial interest in extracting from you your proper licensing fees. So they are vigilant in finding those breaches and pursuing them to, if for no other reason, regulate the business, but also collect the money that's owed the state.
And has technology changed the way that states enforce fees and taxes?
I would say it has, in that it's kind of interesting. I had this conversation once that the internet has actually made it easier for people to inadvertently violate licensing laws, regulations, and statutes. But with the moving of a lot of insurance marketing to the internet, there's almost probably so many violations that it's overwhelming to the regulatory environment to try to catch them all. That doesn't mean that if they catch you and you weren't properly licensed, that they can't enforce that, and enforce it sometimes with the insurance company that you're doing business with. So they have multiple clubs that they can bring to bear, not only on the agent who may have acted in an improper way, but also the insurance company that was involved in the misstep, if you will.
The other thing that I think is important to discuss is this idea that a basic license is required anytime that you accept commission on insurance, property, casualty, health, etc. And can you say a little bit about, for someone who might say, well, I'm not, I don't need to be licensed. I mean, I'm not selling insurance. I'm simply accepting commission on insurance. Can you say a bit about for that situation?
Yeah, it's good to, in my experience, everybody has to kind of make their own business decisions on when they're licensed and when they're not. But a couple of things to think about. One, there's 51 different answers as to what activities and functions you're carrying out require various licenses in the states. So you have to be very cautious, because you might believe, because your experience is in one state, that something, and you may even have a letter from or some sort of interpretation from the insurance department that you don't need a license for that. But as soon as you cross over into those other states, insurance is regulated on a state-by-state basis. So there's a different statute potentially in effect that's controlling that activity in another state. So you have to be very careful. Just collecting a commission, I can tell you that if you collect a commission and you're not licensed, I can't think of a state where you probably don't have a problem on your hands. I mean, collecting a commission and not being licensed in an insurance transaction is like the biggest and most flagrant violation. But that doesn't mean that something less than that doesn't cross the line in a particular state you're in. If you're giving advice, if you're counseling people to go in one direction, maybe you're taking a fee for facilitating that transaction that doesn't look like a commission to you, but if the transaction's unraveled or looked at closely, it may in fact be interpreted to be a license requiring activity. There was a period of time when lots of entities wanted to get into the insurance business, and it used to be administratively more difficult than it is today to be licensed in insurance. Or maybe you were prohibited from being in the insurance business. Let's say you were a financial institution 15 years ago. Some banks in some states were prevented from being licensed. So there were techniques that people would come up with that, well, we're not getting a commission. We're getting a lease payment for hosting an insurance operation or for renting our customer list to an insurance operation. Many of those were unraveled by insurance departments, and they're saying, if you don't call it a commission, you call it a lease fee or a licensing fee. We look at it, it looks like a commission to us. You should be licensed. And if you get caught, that's worse than being licensed, right? Because they're going to come back with more than just, let's get you licensed now. It may be an actual violation of a statute with fines and other penalties.
Spot on Insurance is sponsored by ILSA, Insurance Licensing Services of America, America's premier insurance licensing experts. To learn more about ILSA and the services they provide, visit ilsainc.com. So another thing I just wanted to clarify is we've been talking about insurance licensing for property, casualty, life, but for variable lines, that would involve FINRA. Is that correct me if I'm wrong? Is that correct?
That's correct. So if you go into the securities investment arena, depending on how the product is structured, or if it's a straight securities product, it's going to be an entirely different regulatory regime that you need to be aware of. So if it's financial products, of which the gray areas are between insurance and securities, those would fall into the securities regulatory environment in FINRA.
So, Paul, let's say I'm an association and someone comes to me and says, I'm going to pay you for the use of your name. Do I need to be careful about licensing in that instance?
Yes, you do. It could easily be interpreted as a commission and requiring of a license. And we at the National Association, at the association I work at, the Big I, we don't directly sell insurance, but we do get some payments for the use of the IIABA's name. We've always chosen to be licensed because probably two reasons. One, it just seems like the right thing to do. It is, in fact, commission-like in that it's a percentage of a premium. But also from where we sit, we very much support the state insurance regulatory regime. And so we're always going to probably go to the letter of the law and be licensed. But without that second aspect, and you're just an association that really doesn't have anything to do with insurance, but your name would lend an endorsement, credibility to the insurance provider, you do need to be careful. You really need to research that. How are you being paid? In what states are you being paid? And you really should investigate whether you should be licensed for anything that looks like a direct payment from the sale of an insurance product that you're at all involved with.
Lastly, I wanted to ask you about the difference between admitted business or non-admitted business, or excess lines or surplus lines. Can you say a bit about the difference between the two?
Sure. It's a very important distinction in how insurance is regulated. Generally speaking, when you buy a standard insurance product in any of the 50 states or the District of Columbia, it's going to have premium tax paid to the state. The state's going to regulate that insurance company, and they're going to be looking at their financials and regulating the distribution of it. That insurance company has to probably file their forms with the state insurance department, get those forms approved. Not always, but almost always. And that's what's called admitted insurance business. It's very, very much supervised by the state where the insurance is sold. Non-admitted business is designed to be a pressure release valve in the industry, where if you can't find coverage for what you need covered as a consumer or a business, And in the admitted market, there are insurance companies that will write that for you in the less regulated environment, called sometimes excess and surplus lines, sometimes just surplus lines, or the non-admitted marketplace. And that business does not have the oversight that the admitted business does. And taxes are different. The qualifications of the people involved selling that product are different. You also need oftentimes to have some proof of your inability to get the coverage in the admitted marketplace. So you have to be very careful if you're an association or another entity that's in the business of selling non-admitted or surplus lines insurance, because it's regulated differently. It's regulated less in some ways, but if you go afoul of the laws, the outcomes can be worse for you. You have to be very careful if you're involved with surplus lines or not admitted insurance coverages.
And is there a place where a producer can find out which business is admitted and which business is not admitted?
Well, a producer generally will know, because the disclosures to the consumer, the business, with non-admitted coverage usually requires various very obvious disclosure on the insurance policy that's ultimately issued. But you really have to know the entity that you're dealing with. And they should be making you aware that it is excess and surplus lines or non-admitted business that you're going to be selling. Some states will have different licensing requirements for the person who's talking to the insurance buyer. So there shouldn't be a situation where you don't know that you're selling a non-admitted product once it's ultimately sold, or as you get further along the lines of getting the product ultimately delivered. But it is easy to come to that conclusion a little bit later than the very beginning, where you'll think you're talking about placing some business, and then later on you realize that it's not admitted or surplus lines. So I think the best advice is to know what you're selling, know the intermediary that you're dealing with, so they make you aware of those various requirements if it's non-admitted business.
Paul Buse, thank you so much for joining me. You've given us great stuff to think about. If people want to learn more about Big I and check it out, what's the best way for them to do that?
Our website's a great place to go, and that's IIABA.net, Independent Insurance Agent Broker America.net, has a very full listing of all we do. The products and services areas are highlighted under the Big I Advantage section of the website. And our state associations who ultimately deliver those products to or through our 21,000 member agencies all have links to our website, or you can go independently to all of our state associations as well.
Paul Buse, thank you so much for joining me.
Thank you, Doug.
When you get a chance, go to our show notes and click the link to rate and review our podcast. We greatly appreciate it.
Thank you so much for joining us. And don't forget, we'll be answering your podcast questions every Friday live on Facebook at 11 a.m. Eastern.